If you'd like to see more of our videos, hit the subscribe button to stay on top of the market news. Good morning, traders. Welcome to today's market review. This is Razak at CMtrading. Today's May 14th, 2020. And today is Thursday morning. So looking at the highlights of the day, the Dow Jones continues to tumble further down after Fed Chairman Powell added some negative words towards the economy. But first, let's take a look at the economic events of the day. So in all purposeness, there's only one event coming out today at 3:30 South African time. That's weekly unemployment numbers coming out. Now, this is an important number, but nevertheless, it's already been factored in, okay? It's no new news that, a lot of people are out of jobs in the United States. But the question is how much further will this go? How much further will there be unemployment, or will there be an increase of unemployment that has yet to be recorded for? So that's something to look into today. Now, looking at the markets, we're going to start with the Forex symbols. Will the British pound actually break 122? It's actually very close to it, and it's getting much weaker versus a dollar. Now, looking at the Dow Jones, as mentioned, it continues to lead the market lower. The question is, how much further can we go? And looking at the commodities, gold unchanged and oil stays the same, steady at $25.50 a barrel. Now, lastly, looking at the stocks, they're down across the board, which means it's bona fide selling. It's not panic selling. It means that the markets are selling off and they're unloading from some of these equities. But let's take a look at the markets and see what we can expect from today's trading. So we're going to first take a look at the Euro USD, just because it's also a leader against the dollar. Okay, we're trading at this 108.56. We tried to get up to this 108.81 last week, but not really following through on it. Okay, so we're still trading in a range. We are flirting with this area of 107.82, and especially if we do break this area, I do believe we could get down to the 106-ish level. So something to consider as that continues. Like looking at the GBP USD, we're sitting at support right now. Okay, let's take a look at that. We're selling off this morning. Now, this is really an important factor, because if we look at that daily, okay, you could see that this threshold of 121-ish level, 122, has really been a very strong factor. Okay, it's been a support several times. It's been a support there, a resistance. So this is an important place to be. Now, we haven't broken it since we had our debacle back in March, and now this is really, eyes are focused on it. Okay, if it does break up below this, we could definitely see it get back to the 119-ish level, which means that the dollar is getting stronger versus the other currencies. Okay, now I don't want to say it too soon, but we may see ourselves back into this panic mode that we were about 2 months ago in March, just because the lockdowns are easing, which means that there possibly will be more infections of the virus, which means that they'll go back into lockdown. Okay, so still, we are in an element, and we'll be discussing it on the webinar tonight. We are in an uncharted territory right now. Now, jumping into commodities, gold pretty much steady at 17.15. Okay, hasn't broken above the 17.41, but if it does build some momentum, we can see this break above 1741. Now, this is happening in consistency with the Dow Jones going further down. And we know that the Dow Jones goes down, gold goes up. Okay, so this may actually happen now, because now it's no longer a pandemic scare. It's more of an economic scare. Okay, the pandemic is there. We've kind of gotten used to it. But the point is that its effects on the economy are coming through. So you're going to see investors shy away from equity markets and go into something like gold. All right, so it's something to consider as we enter today's trading. Now, looking at oil, we're trading at 25.51, just flatlining here, nothing to really write home about. Now, looking at that Dow Jones, let's look at a 30-minute chart. This just tumbled yesterday. Okay, look at that massive selling, and look at that volume following the massive selling. Look at that massive volume that is happening right here. Okay, so really a very easy layup. Unfortunately, if you missed it, okay, we did mention it yesterday. 23,055 is where we're trading right now. If we do break this 23,000, then we could get back to the 22,500-ish level. That's really the next support level. If we look at that, that was where we were, just before this massive rally that we had, or massive bull market and a bear market, okay, if you call it that. This bounce from 20,000 up to 24,000, okay? So this would be the first time that we're hitting there, and then we'd be back somewhere in the 22,500-ish level, okay? That would be our next support level on the way down. So something to consider later today. Now, jumping to the stocks, they were weak. They followed the market. Apple broke down. Amazon even broke down a little bit, okay? 23.66 stayed green, but it broke down. Microsoft breaking down. Facebook breaking down. Everybody broke down. Everybody caught up to the regular market. Now, we spoke about this, okay? This is what I mentioned earlier this week, is that at a certain point, even though the high-tech stocks are strong, they're going to catch up to the general market, okay? It's the general market that fuels the economy, okay? That's a very important element to understand. JP Morgan. Now, this was the one, we spoke about it. It was trading within a range. Let's look at a 4-hour chart just to give us a perspective here. It was trading within this range, okay? And the whole time the market went up, okay? When the Dow Jones went up, this did not go up, okay? And I mentioned this several times, relative weakness versus the general market. And when it sells, it's going to sell. And sure enough, from $90 to $83, it retraced this week, okay? It's bouncing at $84, but if it does break this $83, then we could be back in the 77 and even lower, okay? Possibly as we enter the summer months, okay? So people taking their money off the table, trying not to go long on some of the equity markets. Now, of course, this is all dependent on the coronavirus situation and how that unfolds, but in the interim, in the next 3 to 6 months, we haven't seen any end to this virus. So the economies are going to be reacting accordingly. Okay, so just keep that in mind. This is Fred Razak. I want to wish you guys a great trading day. Thank you.